the US dollar as a reserve status system is going away. The UN is basically going away. International order is going away. Maybe the Federal Reserve, as we know it, is going to go away. For years, I've been saying $10,000 gold. Silver is going to go to $1,000 an ounce. $1 million Bitcoin, I would say the same thing. Is it 2 or 3 years? Is it 10? In 2022, they seized Russia's assets. That didn't spur de-dollarization. That was a sign that it was already kind of accepted. I think Bitcoin and gold and silver and the non-dollar denominated assets, emerging markets, it really are the play for not just months, but probably years to come. And you cannot believe it because you have a puritanical mind and you think we have to be punished for our sins. You know what? History tends to actually work out in the long run. Probably my biggest heresy is my statement earlier that fiat can be a good force for good.
Mr. Mel Madison, thank you so much for joining us here today. For those of you who don't know Mel, it's the first time he's been on our show. I'm very grateful to have him here today. He's an investor, an author, and has been in the markets for a while, former fintech executive, and been in the game for a number of decades. So I always love seeing you speak, like I told you offline, Mel, and everything you do, just your cogent, timely, nuanced opinions, well thought out. So I appreciate you being here today.
Well, thanks for having me, Brandon, and I'm excited to be here. So I always appreciate coming on and sharing my views. So thanks for the opportunity.
So we were just talking offline a little bit, obviously about the Fed, things that are going on. It's just an incredibly wild time. And before we get your thoughts here on the Fed, we're going to wind through obviously Bitcoin, touch on gold and silver, some macro stuff, geopolitical, everything. But I would love your thoughts just on, again, even this world order, the international rules-based order, everything that's going on right now, and just kind of get your download from you.
Yeah, I mean, overall, I think it's a very interesting time. I mean, one of the things that I was saying last year around this time before Trump came into office was to just be prepared for some volatility and to understand that Trump 2.0 was not going to be a redux of Trump 1.0, and that there was a lot more boldness to be expected, if you want to use a favorable term, out of the box antics, if you want to be a little less favorable. But basically that he was not going to be afraid to do some things and push the envelope, and that would include pushing markets into places that maybe they're not very comfortable with. You're seeing these non-dollar denominated assets, the quote unquote debasement trade, continuing to work. And I think that's kind of a underpinning. Like, it's not like something new or revolutionary or something that's going to change. It's going to have its ups and downs for years to come. But this is the longer term theme. Now, set within that theme is going to be different periods of time where different assets do different things. And if you rewind exactly a year ago, the whole narrative out there was, well, the Trump election means probably like a weaker dollar. It means, he's going to try to get his hands into the Fed. It means deregulation. It means high nominal growth. It means high debt because Doge won't work. And all those things mean good things for gold, but yet gold wasn't going up. Bitcoin was, because everybody wanted to be in Bitcoin, and Bitcoin was the new gold, and Bitcoin was where the Momo was, and Bitcoin had the regulatory headwinds, and the Genius Act was going to come, and the Clarity Act, and the Strategic Wealth Reserve. And so even though everything fundamentally was saying this is going to be a great year for gold, gold wasn't ripping, at least not in January of 2025. It certainly did later on. Right now, we have the mirror image of that. We have everybody saying the exact same things they were saying about gold last year. Now they're saying it about Bitcoin. So I guess gold is the new Bitcoin, newer old gold. I mean, it's like these things are going around. And so that's what I mean by there's a larger theme going on, but that doesn't mean that kind of all the bells are going to ring simultaneously and everything's always going to make sense, because under the covers, there's something I just like to generically call like financial plumbing or market structure, or use whatever terms you want for it, that's going on. And I think after 2 years of triple digit gains in 2023 and 2024, I think all of the hype, all of the people on X saying, if you own 0.1 Bitcoin, you're going to have a $10 million net worth in the next 12 months. And all this stuff that was just getting out of control in the beginning of the year, that steam had to kind of come out of the trade. And I think that's what we're really been seeing. I think there's other things going on. I think we're seeing some of the older holders using this as a liquidity opportunity. I think that we saw tax loss selling at the end of December. That's over now. I think we saw some disappointment. Kind of the Strategic Wealth Reserve was put on the back burner. The Clarity Act, which is the Market Regulation Act for crypto and Bitcoin writ large, is currently kind of in various stages. We can get more into detail on where that's at. And so you had some of these, what I would call not necessarily short, but I would say medium term headwinds that make a lot of sense when you look at what's happening. But that doesn't necessarily, at least in my mind, it doesn't lead me to say, okay, this whole trade is over and Bitcoin had its moment and now forget about it and move on. I think it actually means that you're probably looking at an opportunity similar to the opportunity that was in gold last year at this time, when everybody loved Bitcoin and gold was second fiddle. And the play then was to buy gold, not Bitcoin. I think you're probably in a similar situation now. Not that I don't think gold's going to not have a good year. I think Bitcoin and gold and silver and the non-dollar denominated assets, emerging markets, India, China, Alibaba, Brazil, EWZ. I think all of these things are ripping today and really are the play for not just months, but probably years to come.
So there's a couple of things you touched on there that I definitely want to get to, but do you think that it's just people being impatient? The Bitcoin crypto crowd obviously tends to be more impatient just because they skew younger. Obviously the gold and silver crowd has been dealing with this for decades, right? I mean, just waiting for like, hey, like when is this going to be correct? Right. So is it just like this? Because I've heard you talk about this before, just, I forget what pause, but just this, like after 08, 09, 10, it felt like there was going to be like this great depression, the dead cat bounce, like a 2012 at bottoms. And then like, oh, it got to crash. There's no way it can print this amount of money. And you said like, hey, there's probably going to be this world where we just keep kicking the can every like 5-8 years, something breaks and then we just print, kind of like paper over it. And it can do this for a lot longer than we even realize. And I think that, and you talked about the demographic shift too, which I think it's a sobering account for. I'd love your thoughts on just, how much longer this really takes from this wealth transfer from the older generations to the young. And you could like the trade seems obvious, right? Like you said, non-dollar denominated assets, but here we are and it's right there, but almost no one sees it at the same time.
Well, I think, it's a little nuanced. You mentioned at the beginning, you like my nuance. So I'll be a little nuanced. Like in this sense, I actually think like, for example, fiat, I think it's a little bit like nuclear power, nuclear energy. On the one hand, you can make weapons of mass destruction. On the other hand, you can make, cheap, sustainable energy. Does it have negative side effects even when you're making that cheap, sustainable energy and cause problems that need to be dealt with, like radioactive waste? Absolutely. And so I think in a weird way that the real problem exists when people mistake a fiat dollar for some sort of a store of value or even as money. Like the dollar is not money in my definition world, right?
Right.
So what it is it's kind of a unit of account. It's a medium of exchange, but it's not a store of value, and it doesn't do what traditionally people would think of money to do. And so if you're able to separate that in your mind and say, okay, this is basically a point system, like in a video game. In a video game, there's no reason that you can't. It's not like, oh wow, we're getting up to 200,000 points in Pac-Man. I mean, the machine's going to blow up. The Federal Reserve can hold $15 trillion on its balance sheet. The U.S. government can be $80 trillion in debt, and the system doesn't need to collapse. And people have been saying this same stuff for decades, literally decades. You can just go back and listen to people say, oh, well, the Fed balance sheet went from 800 billion to 3 trillion. We're definitely going to collapse and the system's going to explode and the banking system's going to go down. Or you could go back with things like silver, which I've been a silver investor for a long time. When I bought my first physical silver over 20 years ago, they sent me a video with it on a DVD. It was called Why Silver, Why Now? And the whole thing was about, dollar debt cycles, the physical demands for silver's in a structural deficit. All the like the exact same stuff you could read
Yeah, it's
on
the same.
X last month. This is exactly what people, and you could go onto like some silver guy's YouTube page and probably find a video from 2011, and he's going to repeat every talking point that you have heard about silver for the last 3 or 4 months was being repeated and infinitum for the last 25 years. Now it's right. So now all of a sudden the narrative fits the price action, but that narrative has been around for decades. And so the narrative doesn't always fit price action. And that's what's happening with Bitcoin, right? People are looking and they're saying, this is the Bitcoin narrative. This is Fed independence being threatened. This is Trump talked about a $1.5 trillion defense budget. This is, I mean, what else could you ask for, right? Like
Right.
The narrative is telling you this thing should be going up, and yet it's not. And that can lead people to say something's broken. And you have to respect price. You have to look at price. And you have to be willing to admit when you were wrong. 5 months ago, 4 months ago, when we were breaking below 100, I thought that was an incredible, entry point. And I basically was like, this is a good time to load up on it because all the technicals were telling me this. I was wrong. I don't come out and tell everybody, okay, you've got to load up now. I actually think we very well could be in the bottoming process. All my core holdings are still in place. I haven't sold any of my actual coins or some of the IBIT I hold in different retirement accounts and different things. I just haven't put on a lot of big like option related IBIT bets or different things trying to catch the exact bottom. But I do think for like longer term additions, this is a good time to do it. For someone that doesn't have a position that wishes they had a larger one, this is the time to do it. For someone who's looking to play like a short-term levered bet over the next 3 months, it could be an amazing, upside potential. It might not be, but we'll see what happens. Right now, we've got a lot of good things going on.
All right, real talk for a second. We all know health insurance is basically the fiat system of healthcare. The biggest debauchery there is. It's expensive, confusing. Somehow you still end up paying hundreds of dollars for a Band-Aid. We moved to crowd sharing almost 5 years ago. It's the best decision we ever made. Instead of sending your money to the insurance company's black hole, you join a like-minded community that directly funds each other's medical bills. Simple, transparent, way cheaper. And that difference you save, you can invest in Bitcoin. It's an amazing win-win. And look, we're part of the Bitcoin community because we believe in freedom, decentralization. Crowd Health brings that same mindset to healthcare. You choose your doctor, you pay in cash. And the community's got your back when the big bills hit. No networks, no middlemen, no bureaucrats trying to approve your care. Just people helping people the way it should be. You make decisions about your health. That's as sovereign as it gets. So if you're ready to take the orange pill for your health, this open enrollment, go to Join Crowd Health to get started for $99 for your first 3 months using code Brandon at joincrowdhealth.com. That's joincrowdhealth.com, code Brandon. Crowd Health is not insurance. Opt out. Take your power back. This is how we win. Generational wealth doesn't happen by accident. Bitcoin fixed the money, but it didn't fix the system of protecting and passing it on. Bitcoiners, we have to live in two different worlds, idealism versus pragmatism. That's where Meanwhile comes in. It's the world's first Bitcoin-denominated life insurance company, regulated in Bermuda and built entirely by Bitcoiners for Bitcoiners. With Meanwhile, long-term holders can grow and protect their Bitcoin wealth through tax-free policy loans, no repayment obligation, no margin call risk, while making inheritance simple and secure and entirely in Bitcoin. It's about sovereignty, stewardship, and building a legacy that lasts centuries. Because if Bitcoin is forever, your plan should be too. Learn more and sign up with code 4QPBWC at meanwhile.bm. That's meanwhile.bm, code 4QPBWC, or just sign up in the link in the description below.
But all of these things are like setting up and saying like, look, this is a great time to build a position. It's a much better time than last year when a lot of people probably who had never been in Bitcoin before got into it and then flipped out in October or November and sold it. So, I mean, all these things are just kind of the way that market works. And I don't think it's necessarily that there's anything wrong. I think it's a maturation process of Bitcoin. It's not going to have necessarily the upside, quick, 80% moves in 2 weeks like it used to, at least not very often. But that doesn't mean that it doesn't have huge upside potential still, because it is still a relatively small asset, less than $2 trillion in total value, a lot less than silver. And Google's more than twice as valuable as all the Bitcoin in the world combined. When you look at things through that perspective and you have these smaller markets, you can get really big, really quick up moves, as we've seen in Bitcoin before and as we've seen in silver in the last 4 or 5 months.
So going back to the multipolar world and the order, right, is kind of the thing of the day the last couple of weeks. And is this I don't want to engage in cognitive dissonance and trying to mind read people, right? But just your like overarching thought on like, is this by design, Russia, China? Because some people are like, oh, if Trump signs something with these guys right away, and it's like the big three, like there's just going to be this fractured world. And at the same time, like, does someone call our bluff? Like you said, I mean, we could go to 80 trillion on our balance sheet, 100 trillion in debt eventually, because we're at the exponential part of this debt curve. I mean, it's rapidly speeding up. And to your point, like, if no one calls your bluff, you could just do it ad infinitum. I mean, theoretically, as long as inflation, like, people aren't just like, I guess, rioting in the streets or whatever. But does confidence eventually erode enough out of the dollar where people just, the old hyperinflation where it's like, I just don't believe it. I don't believe this is worth anything anymore. Like, where does that all kind of fall in your eyes?
Look, the deficit in last fiscal year was less than it was in fiscal year 2024 because we also had higher receipts. We reduced debt to GDP. I mean, you don't hear this, right? You don't hear, oh, debt to GDP is going down. Yeah, it's down actually significantly from the post-COVID highs through a combination of nominal growth, inflation, and then most recently just by the fact that the deficit hasn't been going up. It was, I think, $1,775 billion this past fiscal year versus like $1,825 billion in fiscal year 2024, something like just $50 billion less. But we also had pretty good economic growth. So you actually had, like I said, as a percentage of GDP, the debt went down. So, I mean, people look at things and then they're like, oh, we're like on the verge of like falling over this cliff. But then you listen to somebody like Elon Musk on a Moonshots podcast I was listening to. He was on with Peter DeSantis and this other guy. And their big concern is deflation. It's what they called the need for universal high income, that there's going to be this world of abundance. And so when you back this out, what I see some very massive deflationary forces going on. Number one, I think, is demographics. For the first time, the human population on a global level is it's like a curve like this. It's very flat for thousands of years. Then it just kind of skyrockets up. And then relatively recently, with the onset of modernization, birth control pill, everything else, it's starting to plateau. And the estimates I see is that we're somewhere around 8 billion. At some point, we could reach 10 billion, and then we're going to decline. And so we're going to keep going up a little bit, but nothing like we've been going up. So the second derivative is much slower now. And then in the developed worlds, especially certain countries, population growth is flat or even negative. That is a massive deflationary force and something we have not seen before in the post-industrial revolution era. Okay, one huge deflationary force. Number two, AI. Technology is in essence a massive deflationary force. The cost of labor, the cost of compute, the cost of I mean, there used to be people that their whole job was to just sit there and do like multiplication, right? Like a scientist needed to, calculate out a complicated equation, and it had a bunch of math to it, and they'd give it to these human calculators, and people would spend their whole lives doing, long division that can be done in, with your iPhone in a split second for nothing. So you have two huge, now, if you've got these two huge deflationary forces, but then you've also got an economy that is built on inflation and rising nominal GDP and rising earnings, how do you then keep inflation going? And the way you do that is through printing of money. And this is where I said fiat can be as long as you don't look at it as a store of value and you look at it more as a video game point scorer, this is where the ability to run up those points comes in handy. So like, if you think about it, like, okay, let's say there's a 7-8%, natural deflationary force, over the next decade because of AI and demographics, but you're targeting 2% inflation. So you actually need to counteract 7% of deflation plus you want 2%, you need like 10% monetarily created inflation is what you need. It's what you want. It's what stops the system from collapsing. And so in that case, you get to a point where you're actually saying, hey, the central bank should be lowering interest rates. The government should be running bigger deficits. We should be increasing the debt. And that's what the system needs to be healthy. And then you say, whoa, Mel, that's not what anybody's saying. Everybody's saying the exact opposite, that we're heading for collapse. This is all going to fail because we got too much debt. I actually think we don't have enough, and we're going to have more. And there's going to be even more. And you're going to see, as I said before, the corollary to this, the nuclear radioactive waste that fiat's going to put out is going to be a debased dollar, and that's going to be higher non-dollar denominated assets like gold, silver, Bitcoin, emerging market stocks, things of this nature. And I think you're seeing that play out. You're seeing it happen before your eyes. And I don't think you're seeing commodities go through the roof: copper, aluminum, platinum, palladium. It doesn't matter what you're talking about. When you're talking about real assets, that's where you're seeing this play out. And then you're seeing companies are going to keep their earnings up because of this monetary inflation component, and governments are going to be able to fund their deficits because basically the deflationary forces are going to counteract it. Now, maybe that's a rosy view that, it's a needle to thread and it doesn't exactly always work. Sometimes they might become misaligned and you get, too much money printing or too little, and, you have different scares and volatility. But this is backing out really big picture. I actually think if people are saying, I don't see how the system survives without some massive calamity, depression type collapse, I would just say that, I can give you the roadmap, and I just kind of did, and you cannot believe it because you have a puritanical mind and you think we have to be punished for our sins. Or you can say, hey, you know what? History tends to actually work out in the long run. So maybe this guy's making sense.
It's funny you say that, because that's, again, like either the Harry Dents of the world, the Jim Rickards, the Mike Maloney's, all these people. I mean, the Robert Kiyosaki, to this day, right? It's always been calling for a crash, right? The memes of like, he's one of my favorite financial mentors of all time, who I started with, 15, 16 years ago. And, it's like, I feel like a lot of the world's living in that old paradigm, where like money was still backed by something, which to your point, like, well, that wouldn't be good if we were obviously ballooning debts. It's going to keep going, whether we like it or not. I mean, is this kind of the game we're in? Like this is feels like it is.
And I think that's a whole nother like can of worms, is kind of the social, civil unrest scenario, which I think can be dangerous. And I think there are risks out there, and that's probably one of the biggest ones to kind of my rosy picture. I think, just to say like two things about the doomers out there, I do think there's two fundamental mistakes they make. One, they're still envisioning the world through a gold standard lens.
Yeah.
They're still looking at the world thinking, well, you can't just print like there has to be a price to pay. And that's really the second point, is that there has to be a price to pay for this, and them thinking that the price has not been paid. But go ask someone who's 35 years old who wants to buy a house, who just saw those home values go up 35%, whether or not a price is being paid. So there was a price to be paid for all of this money printing. It's called inflation. And so the price is continually being paid over time, and it's a serious and significant price. There is no true free lunch. So that's one point. And then the other point is this, gold lens. And I think this is really, when you look at central banks and you look at the reason they were created, was governments needed to fund themselves and they needed gold. They needed to get gold from bankers. And so they made these quasi institutions that were part bank, part government. And if you look at the Federal Reserve System, and it is called system, it's the Federal Reserve System Act of 1913, because there are 12 regional banks. And while there is a board of governors in Washington, D.C. that's appointed by the president, there's also these 12 regional banks, including the most important, the Federal Reserve Bank of New York. And those are wholly owned by the member banks. They're wholly owned by J.P. Morgan, by Citigroup, by Morgan Stanley. That's why, in the Supreme Court, they said the Federal Reserve is a quasi governmental institution, not a governmental institution. That's why when you look at Treasury documents and they list out how much of the U.S. government debt is owned by the public, the 7 trillion or 6 trillion, whatever it is, of U.S. Treasuries on the Fed's balance sheet is in debt held by the public. It's not listed as intergovernmental debt because the Federal Reserve is, and the reason the central banks were needed, like I said before, was to go back to 1694, William III founding a Bank of England, was he had a war with France. He needed gold to build ships, and he went to the bankers. The bankers would not lend him money because he had defaulted on his debts. But they said, give us the right to issue paper notes, a legal tender, exclusive rights. We will go to the people, collect their physical gold and silver, issue them paper notes, and then we will lend you their gold and silver, and you pay us, we'll collect the interest. This is basically banking. This is central banking. There's no longer gold that needs to be collected from the people. The Federal Reserve is a redundant, anachronistic institution, in my mind, that does not need to exist. It would rattle markets for it to disappear, for sure. And so I think that's why people dance around it and love to talk about Fed independence, which is another bullshit idea in my mind. It's never existed in reality. But this is an institution solely created by Congress to fund the government. That's what it was created for, not to be a recess moderator and keep an eye on the markets, which is what it does. But basically, the whole idea of a true fiat world is actually very empowering, in a sense, that you now have to solve for how much money can we print and how much kind of debt. Well, we don't even need to issue debt. You can just issue the currency, as we've done before with the greenbacks or the continentals, without creating and stoking inflation. And so the constraint is a supply-demand constraint. And this is what I think is happening, is we're getting a huge influx of supply at the same time that over time demographics are going to reduce demand. So if you get a huge influx of supply and a reduction in demand, you then open up a window for more money to be in the system without an inflationary effect. What we had in 2022 was the exact opposite. We had a reduction in supply because of the supply chain constraints that were going on because of COVID. And we also had an introduction of new supply of money through all of the printing. And then we had a demand concentrated in certain areas. Things like homes. Everybody wanted to fix up their home, build a home, put on an addition, so you essentially had this perfect storm recipe, and we got 9-10% inflation at the highs on CPI, but in reality, it was much higher than that. And now what you're seeing is people are seeing like the latest CPI report print 2.7, and they're not believing it. And they're thinking like this is, and maybe there is some funny business with the numbers. But what I think is going to shock people in the coming quarters and years ahead is that inflation isn't going to skyrocket out of control, even with the amount of money printing that is going on, because of these kind of more fundamental supply demand characteristics in our economy, which are very unique and almost unprecedented in modern times. And I think that once people recognize that, then they'll begin to recognize that, hey, we're going to see inflation in copper because everybody wants it to build data centers, or we're going to see inflation in silver, or we're going to see a dollar debasement trade go on. But then we're not going to necessarily see beef prices go through the moon, right? Like they've been up and down because of, diseases or different things. But my point is like, there's a good amount of cattle, the amount of protein being consumed in the U.S. kind of meets with that. There's an importation. Now, are there going to be people eating more protein in the rest of the world? Yes, but cattle can be bred, and the supply can help to meet that demand, and things can be kept somewhat in line. I think there's going to be inflation. There's going to be debasement, but there's not, in my mind, any signpost that we're at some sort of a wall or a cliff that we're like this close to going over. And, last year at this time, everybody was convinced we were, that bond yields were going to spike, that the 10-year was going to go over 5%. And if you look at what like the 10-year yield did last year, end of first quarter, end of second quarter, end of third quarter, end of fourth quarter, it was all within 5 basis points of 4.2%. I mean, it did not move. It was as stable as a rock. And yet at the beginning of the year, everybody's flipping out about bonds and bond vigilantes, and everything's going to collapse. And the 10-year basically just walked cool as a cucumber right through the whole year.
There's one thing more important than Bitcoin: the time you have and the people and relationships you build. In a world full of noise, the real signal is meeting with other Bitcoiners IRL, finding Bitcoin-only events, connecting face-to-face, and supporting the circular economy through Bitcoin-friendly merchants around the world. That's exactly what Club Orange is built for. build your circle, support Bitcoin only companies. The only place in the world you can find all that in one spot is the Club Orange app on iOS or Android. Go to cluborange.org, what used to be the Orange Pill app, or scan the code here. Everything you are learning in this episode is completely moot and does not matter if you hold Bitcoin and are still leaving it on an exchange or sharing keys and your KYC information with a third party. This is your wake-up call now. You are only self-sovereign if you alone hold the keys to your wealth. 100% self-custody sounds daunting at first. Believe me, I lost 2 years of massive gains over a decade ago because I was worried about taking the few minutes it took to understand self-custody. And that's exactly why you need to talk to my friends, Tony Yazbek and his team at the Bitcoin Way. We just interviewed Tony recently, has over 80,000 views, an overwhelming response. People love his story and the simplicity he shares of how easy it is to custody and take ownership of the greatest money we've ever seen. They'll train you to do it right the first time. Head on over to thebitcoinway.com/Brandon to schedule a free 30-minute consultation today. Their 5-star rated service is exactly what you need. Quit sitting on your hands like I did and get started today. Again, that's thebitcoinway.com/BRANDON. It's cynicism or just being negative on everything is always like the easiest. That's what gets most humans' attention, right? So if you're sitting there just saying, oh, things are going to like they're just going to be okay, you're just going to like channel along, then it's like you just get run over, right? Like it's unfortunately the truth a lot of times, but no one wants to hear it. They want to hear some provocative, we're going over the cliff or we're going to the moon. Like it's only those are the two options, Mel. Like you can tell me one of those two, right? That's it.
I know. And it's like, as I get, last year, in the beginning of the year, I was saying, I think Bitcoin's going to hit 150 and that's my next price target. And it was like 120 very early. And people were like, oh, Mel, don't you think I'm like, oh, well, I want to see it hit 150 first. I mean, like, this is based on charts. This is based on the 2021 high, monthly close, to the 2022 low. The separation was like 44K. You add 44K to the 2021 monthly high, you get 106,000. That's one move of basically the bowl that it went through. I'm looking for that next move, another 44K onto my 106. That's how I come to 150. It's not just because 150 is a nice round number that sounds good. It's based on some sort of technical analysis. I'm going to wait for it to get there, and then I'm going to reevaluate it, and I'm going to think about it. And, it's like, the same thing with gold or silver. Everybody is going to think, silver is going to go to $1,000 an ounce. Well, it very well might in the next 5 years. I don't think it's going to go to $1,000 an ounce this year, but there'll be people out there that will do that. And then that will be the tagline on the YouTube webcast, $1,000 silver coming soon. And then, people will believe it and everybody will pile in, and then there'll be like a rug pull moment, and then it'll drop down to $70 from like 110. It'll get to 110 and drop to 70, and everybody will flip out, and the trade is over. And it's like this is as old as history. Like you go through all of the market. This is what people do. Like before the 1930s, before all the SEC rules were put into place, and all. I mean, like this was not even done hidden. Like this was. Literally stock traders would meet in rooms and they'd be like, okay, what are we all going to buy? What are we all going to pump up? And we're going to build it up, and we're going to get public to put in their money. And then wink, wink, nod, nod, wait for the signal. We're going to start selling, and we're going to take those profits. And then when it gets crushed, guess what? Then we'll come back in. And now that's not done openly as it was, because it was completely legal. I mean, they formed like groups. Like it was like, an exclusive thing. Like, can I get into your basically pump and dump rug pull club? And this was like with the biggest banks. This is Goldman Sachs and JP Morgan doing this. And because it was legal, there's no laws against it. And so the market manipulation laws really didn't come into effect until the Securities Act of 33, Securities Exchange Act 34, and people realized, hey, we got, tighten this up. Before that, it's the Wild West 10x leverage. Sound like something? Sounds like crypto. To see an 80% rug pull in, a crypto stock of the day, XYZ bonk or whatever, it's like, of course, that's exactly what used to happen with the largest stocks on the New York Stock Exchange before the regulations were in place, because it was, like I said, 10x leverage with no regulations. That's why a lot of institutional money will come in, in my opinion, once the Clarity Act gets passed. Like the Genius Act was a good start, but that's just stable coins. We still don't have a legal regulatory framework passed by Congress, signed into law, which for any listeners that aren't aware of it, it's called the Clarity Act. There's been multiple versions in Congress, in the Senate. Brian Armstrong has been probably the most vocal industry person, the CEO of Coinbase, on it. There's certain stuff that's going on right now. Some of the big banks, from what I understand, are not happy that the stablecoin bill, the Genius Act, did not allow the banks to issue stablecoins and then pay interest, which is basically meaning like people will want to put it on something like a Coinbase to stake it to get yield and rewards. And so there's a lot of inside baseball going on right now with the big banks, the stable coins. If you're wondering why, the Clarity Act isn't done yet, it's because there's billions, if not trillions of dollars on the line for how this regulation actually comes into play. And I think we need to get that over the finish line. And that will be a big green light to institutions, especially if the price is not like at all-time highs when this starts happening, because people will say, this is the entry point, let's start building positions. And then once just a little bit of that institutional money starts coming in, because people think institutional money is in it. Institutional money is not really in Bitcoin. I mean, if it's got a $1.8 trillion market cap, that's one little tiny sliver of it, is in there. Once some real money starts getting into it, I mean, it can move that price, so quick. And so that's why ultimately I do actually think that we're going to get that Clarity Act passed, and some of that institutional money is going to come in, and I think it's going to have, a great year. And that's one of the other things about me. I'm not a Bitcoin or gold type of person. I don't think that means gold's and silver are junk. I think they're going to have a fabulous year. I think Bitcoin's going to have a great year. I even like, Solana this year. And I think the stock market, the US stock market, will probably have a good year too, probably 10 to 20%. But I think there's actually a lot more profits to be made in international markets, international stocks, Bitcoin, and precious metals and commodities than just buying, like an SPY index fund. But, whatever floats people's boats.
Yeah, I mean, that's one of those things too. And I think that, again, I'm sure a lot of people that watch this channel, I mean, like I always tell people too, like I'm a freedom maxi, like people do whatever they want. I've, many people over the years, crypto folks or whoever they were, my contention was always, hey, I would like to change the money so that we're using something different, and then do whatever you want. And my whole thing was just, let's stop putting the cart before the horse. I think the under 40 crowd is just so sick and tired of the 10-tier justice system, and there's no merit, no accountability, no responsibility anywhere. And hey, it's a fallen world, so maybe we never get there. And it's just this constant, like you said, it's just backdoor games being played all the time. And I'm sure a lot of that will always happen. We're humans. Where do you think that the like Elon, we touched on Elon earlier, and he had mentioned recently that, hey, it's gonna be a lot of abundance, like you said, but also I think, we're having energy money akin to the Henry Ford thing from 100 years ago. And, maybe that is Bitcoin. Bitcoin's probably the best thing at doing that. But do you see this bifurcated world of, kind of the CBDC, like we need this like UBI CBDC thing, and then like there's the people over here that have Bitcoin, that type of bifurcation, I guess? Like I'm kind of generalizing a little bit, but how do you see that playing out going forward into the future?
I think a lot of the things that are talked about by the major AI evangelists will come to pass, but I think that AI is in some sense at one point the most overhyped, but also the most underhyped technology of our lifetimes, because I think it is going to be revolutionarily life-changing, all of this stuff. I do think eventually we'll have humanoids. I do think eventually there'll probably be this period of abundance. But again, this isn't sensationalist, and so it's not very common view, but I think it's actually going to come in around a good pace, meaning it's going to add some of these deflationary pressures that we need to keep the system running. But at the same time, it's not going to happen so quick that there's just going to be this rug pull on the labor market and we're going to have 15% unemployment next year. I could be wrong about these things, but I think there's a lot of things that are saying that's not going to happen. I think number one, there are compute constraints, and it doesn't matter how badly Elon wants to build 50 gigawatts. If there's not the copper, if there's not the data centers, if there's not the power, if there's not the electricity, there's only so much you can do. And then number two, there's just like a kind of a bureaucratic organizational human nature component to this, which is adopting it less than it's already, capable of doing. What AI is already capable of doing, if it was immediately utilized to the full extent possible, probably could create a huge spike in unemployment right now. But there's a lot of reasons why people are not either, one, using it to its full potential yet, or two, if they are, they're slow rolling it. They're not telling their boss that they're only working 25 hours a week instead of the 40 they used to. And AI has really cut down on a lot of their tasks because they're working from home 3 days a week, and they're like got an agent doing something in the back they created on Claude Code. And so they don't want to lose their job. And like, these are not like inconsequential things. It's kind of like when economists talk about like, oh, well, there's no difference between dividends and buybacks in a world with no taxes, no transactional friction, no, like, yeah, true. Like from a purely economic theory standpoint, a dividend, a buyback should have absolutely no effect. So should a stock split theoretically should have no effect. The addition of a stock to the S&P 500 should theoretically have no effect. And yet all of these things do have effects. So there's a lot of stuff that in the theory, AI could be a lot quicker, a lot more consequential to the labor market, a lot quicker than would probably be comfortable. But there's a lot of friction in things that are out there in the system that I think are going to keep these things. And it's not really in anybody's interest to just kind of kill the system, right? What will eventually happen is that there'll be like plunky startups that create something, and a company with a bunch of overhead, they're overpaying too many people, and some startup comes out and says, I can offer you that same product for 10% the cost. And the other company says, well, the only way we can do that is with AI, and if we fire a bunch of people. And you'll start to see that. And there will be stuff like that happening. But you are actually already seeing growth, and you are seeing new jobs. I mean, there's a shortage of construction workers. There's electricians making $250K a year that were struggling to get jobs just a few years ago. There are all kinds of more hands-on type jobs that are needed right now. And there's not going to be 80 million humanoids running around in 2 years. Even Elon Musk is like, look, we might get a working humanoid this year, but to ramp up the scale, like his goal is like maybe 1 million of these things. Well, we've got 8 billion people. So right. I think to really dent this massive economy, like these things need to happen in a huge, huge way and really quickly. And right now they're happening in a significant way, and actually at kind of a moderate pace, which I think the economy is absorbing. And let's not forget my other deflationary trend, which is demographics, which is people are leaving the workforce every single month. Tens of thousands of boomers are retiring. So we've got workers just naturally going out of the system. You've got places like China, which had the one-child policy that's, got population decline. You've got countries like South Korea that if they don't do something, their population is going to be 0 in 3 generations. So these places don't need more jobs. They need less jobs because their populations are going down. So maybe it's not necessarily a bad thing that AI is coming along when it is.
Yeah, and it just kind of goes to the humans. I feel like we do underappreciate, or we have a hard time grappling with how humans adapt to things, right? Do you worry about like Bitcoin like narrative being like, oh, it's in the system, it's just another asset, it's just another thing inside the system, and captured by Wall Street? Because you see a lot of that now, right? I mean, a lot of people talk like that, and it's I believe it's a protocol money outside the system, a Titanic, or lifeboat off the Titanic. I mean, how do you see that, and do you worry about that at all?
I mean, like government involvement with things is kind of a two-sided coin, right? I mean, like you can look at gold. Like we were on the gold standard, but the gold price was essentially being suppressed. Like the government was saying it's $35. They were manipulating the market. 1971, Nixon takes us off the gold standard, and boom, you start seeing the gold price off like a rocket. It goes up 25x in the next 10 years, And so the thing with the Bitcoin narrative is, okay, look, once you do get like the derivatives desks and the futures and the IBITs and the IBIT options, and you start getting all these ways to make synthetic Bitcoin. and get exposure through a Delta One desk, or do this. And now all of a sudden you don't need to go in and actually buy a coin, right?
Yep.
So you can get that exposure to the price movement. And so a lot of these things are, I think, like I said, part of a maturation process where it's either going to become involved and embedded in society for all the good and all the bad that entails, or it's going to stay on the fringes of society. But it's not going to become embedded in society and then come out of it with a clean conscience, right? It's like it's dancing with the devil, and it's one of those things that's just the way life works. Like, I wish it didn't have to, but it just is. And so I think that, what Bitcoin's going through right now is it's definitely deviated from the original, cypherpunk mentality, F the system completely, away, but yet it has embedded in it a core element that is, undeniably kind of F the system. And it's not, the US dollar. It's not printable by the Federal Reserve. It's not something that is corruptible completely. And so like I said, these are nuanced views, but I also think it's the best, we have, and it's also the preeminent player. It's kind of like gold. If you look at gold, it's like, roughly twice what platinum is worth. But if you look at gold as a percentage of metal in the Earth's crust, platinum is 8 times rarer. If you look at silver as a percentage of the Earth's crust, it's like 15 times more common. Platinum, gold, and silver do not trade according to those. Gold has a preeminent place because gold is the monetary metal. Gold is what central banks hold. Gold it has a unique position, and it's kind of irreplaceable. And to me, Bitcoin holds that unique, irreplaceable position in digital assets. That there's not, at least not in any easy or soon forthcoming way, a replacement coming along, because not necessarily there couldn't be a better designed Bitcoin. It's possible. There, like I said, you could start to say, let's use platinum, but the thing is that it's already being embedded in that system. And so it's got that preeminent place. It has these incorruptible assets. It has the theory and the philosophy behind it, which perfectly suits these times where dollars are being abandoned as any type of a store of value. We're going to be in an AI world where you're never really going to own a dollar, because your app is going to immediately take a paycheck, move that into Bitcoin or gold or a ETF or something that yields something. And, your bills are paid directly out of this. And the amount of actual dollars that you own, the amount of dollars that I own as USDs with nothing behind them is infinitesimal compared to the rest of the assets that I own. And it's that way for most people. And so dollars are just becoming, like I said, this unit of account. And once that becomes, fully embedded, it actually opens up, that freedom, like I said, to kind of inflate it a little bit. Like if the wages respond, and if the dollars that you've already earned are in assets that also respond, then you're kind of ambivalent about what the inflation rate is, right? As long as your wages are going up more than the inflation rate, and as long as the dollars that you've earned previously in your life are in assets that are responding to whatever that inflation rate is, you really shouldn't care too much whether the inflation rate is 4% or 30%. If these things are what you care about is when those things are out of balance. I would much rather be in a world where I had all of my assets going up 5%, my wages going up 5%, and inflation at 3%, than in a world where my assets were doing nothing and inflation was at 1%. So it's like nuclear power. Is it good? Is it bad? Is inflation good? Is it bad? Is fiat good? Is it bad? Or is it framing it right in your head and then having the world set up in such a way as to handle that structure? And I think the world is the eyes are open. The days of people thinking it's a smart move to take 10,000 and put it under your mattress are done, because they know in 10 years it's going to be worth $1,000 instead of 10. So that, I think that's the situation we're in, and I think it's dynamic, it's volatile. There can be civil unrest. There can be a lot of stuff with the elections. We could start having a socialist front runner for our next president in a year or so, because in a year from now, that is when they're going to start announcing the presidential bids, if not sooner. Markets could get spooked about that. Is that going to roll back deregulation? Is that going to undo every executive order? Like, there's all kinds of things that are going to cause volatility and movements and different things. But these overriding longer term structural multi-decade trends that really kind of bottomed out with, bond yields in 2020 when the 10-year was at like 68 basis points or whatever. That longer, like kind of almost 80-year cycle is now restarted, and we're getting rid of things like the post-Bretton Woods system. The US dollar as reserve status system is going away. The UN is basically going away. International order is going away. Maybe the Federal Reserve, as we know it, is going to go away. And that is just part and parcel of how humanity works. Nothing lasts forever. Rome was not built in a day, and it didn't last forever. It lasted for a long time, but eventually, it fell away. But something came in its place.
Do you think there are, the diminishing returns crowd on Bitcoin? I mean, what is your perspective on the diminishing returns? Since we're talking about, we live in this world, you just kind of laid that out. We price things in dollars right now, right? So, I mean, is there a diminishing returns in Bitcoin that, people that make people, hey, I need to go find something else, but Bitcoin's not going to do it for me anymore?
So for me personally, right, if I think, what do I think is probably going to do the best over the next 10 years as an asset? That's a relatively major asset. And I would say that's probably going to be Bitcoin. Do I then sell everything I own and put it into Bitcoin? No. Number one, the volatility would psychologically create havoc for me. Now, you might be a person who can handle that, or you might be at a younger stage in your life and say, you know what? I'm 25 years old. I only have $15,000 in savings. I don't want to create a big diversified portfolio. I'm just going to put all that 15 into Bitcoin, and I'm going to dollar cost average in every paycheck, and I'm going to start building a position in it. And that might make sense. So I think, how people invest or where they put their money also has to do with their life circumstance. And that doesn't necessarily mean just because you might think, oh, well, Bitcoin has a better return profile over the next decade than the S&P 500. So why do you own some of the S&P 500? Well, I do. Even though I just told you, I think gold and Bitcoin and silver and emerging markets are going to do better. They are the vast majority of my portfolio. My portfolio is a very small amount in NASDAQ and S&P 500 compared to what most people would have. If you looked at like a global asset portfolio, what people have in US stocks is pretty significant usually. And for me, it's less than 20%. What I have in gold and Bitcoin is much greater than 20%. And so people would say, well, that's a lot in those assets. And silver miners or gold miners or Bitcoin or crypto adjacent names or whatever it might be that I'm invested in. And then, emerging markets as a percentage of global equity market cap are extremely small. And my position is outsized. It's greater than my position in the S&P 500. Yet the S&P 500 is like a 60, $70 trillion market. All the emerging markets combined are just a fraction of that. So this doesn't make sense according to a traditional, efficient portfolio allocation, which is going to basically say allocate according to global market cap. So, if S&P is 70% of global equity market cap, you should hold 70% US stocks. And then, you should have 15% international developed and, 2% small caps and 5% emerging markets. And that's your ideal allocation. That allocation, got crushed last year by the allocation that I use. Now, maybe this year my allocation will get crushed by just holding the S&P, and everything I just said will be proven wrong so far. First 2 weeks of the year, it's doing pretty well, being overinvested in real assets and emerging markets relative to US stocks. But, I'm comfortable with that risk. am I comfortable with putting every dollar I own into gold, silver, and Bitcoin and not owning anything else, even though that might actually in the long run provide better returns? I wouldn't sleep as good at night if that's what I did, even though I might wind up making more money in the long run.
I love you said that too, because it again, it goes back to this idealism versus pragmatism. I was listening to a Grant Williams episode, too, and he was just really kind of hammering that home. And he was just like, yeah, I invested in gold and silver 25 years ago, 30 years ago. I've been investing. But he's like, what I'm doing is not right for, someone that's 30 probably right now or whatever, like, no matter what that is. Like, he's like, I'm not. So you have to take everything that people say with a grain of salt. Like you said, where are you in life? What are your goals? What's your time horizon? It's incredibly important. So I love that you said that. Mm-hmm. What are your thoughts on the just the 4-year cycle with Bitcoin? Obviously, it broke. The 4-year cycle broke. I guess technically speaking. So does this free people's minds up so they're not trapped by that? Because as we know, a lot of this is psychological, right? So what are your thoughts on that?
Yeah, and one thing I think as kind of a rule of thumb I came up with as far as thinking about the debasement trade play is take your age and add what you feel comfortable with, either 10, 15, or 20, and add that to your age. And that's how much I think you should have in precious metals relative to Bitcoin. So I'm 50, add 10, you get 60. I should have about 60% precious metals relative to 40% Bitcoin. If you're 20 and you add 10, you get 30, you should have about 70% in Bitcoin, 30% in precious metals. So if you want to lean more towards precious metals, add 20 to your age, and I'd be at 70% precious metals. So I think kind of taking your age and add, 10 to 20 to your age and think about it that way is like a rule of thumb. And that's your kind of debasement trade core. And what I would do is, if I was young, is I would build that core first before I started actually putting a bunch of money into the stock market. I would say, let me start to build this, precious metal Bitcoin core. And then I would start to think about other assets and different things and building around that, again, to a point that you feel comfortable with. For me, precious metals, Bitcoin, and, precious metal miners are probably a good over 50% of my portfolio, if not more. Some people might not be comfortable with that. So, you kind of have to see what you feel comfortable with and what's going on. But I do think that there is something to be said about diversification, because even though you're never having those moments where you're like, oh my God, all I own is Bitcoin and it just went up, 100% in the last 4 weeks, or all I own is silver and it just went up 100% in the last year. You get things smoothed out, which helps you kind of stay invested for the longer term. So like last year, you might have a day when Trump bombs Iran and the stock market goes down 1.5%, but you've got a good size gold holding in there and your account's actually up, and everybody else is like, oh my gosh, my 401k is getting killed today. And you're like, actually, I'm having a great day. And so, because gold's not going to always do 70% a year. It could for a while. I mean, sometimes these runs last, it could do very strong returns for a long time. But I think that if you have that philosophy of like, look, I totally believe in Bitcoin, I don't trust anything else, all I want to do is own Bitcoin, I feel comfortable with the volatility of that, and you're comfortable with that, then go for it. In the long run, that might actually be the best performing portfolio. It might not, but I think that's kind of a to each his own type of a situation, and everybody needs to make those own decisions for themselves.
In your mind, what's the thing that you think people are missing the most about Bitcoin, or the thing that's most misunderstood, or the thing you maybe yourself hear all the time about Bitcoin?
It's a little bit of people wrapping their head around assigning value to what, in some sense, is like a piece of software or a digital protocol. So I think you make a leap with anything you really kind of invest in a way, and you get rewarded for that leap. I think it was a much bigger leap to make before Bitcoin became, semi-established, right? And I think that's why those were where the most rewards were reaped, because it could have gone to zero at a different point. I don't think that risk is like at all, anywhere near the probability that it was a few years ago. It's now in like the 0.0000, one type probabilities of Bitcoin going to zero in my mind. Same way that probably the probability of like some, asteroid starts circling around the moon that's pure gold. And, yeah, is it possible? Sure. I mean, some body could come in and get captured by the moon's gravitational pull, and Elon Musk goes up there and just starts scooping out gold. I mean, is it possible? Yeah. What's possible is out there, but, could a scientist kind of crack the atomic code and say, you know what, the millennium long quest of alchemy is now solved and I can take bars of land? I mean, in a lab, they can create gold, because it's altering the atomic composition of it's neutrons, protons, electrons. I mean, if you can combine neutrons, electrons, and protons at some point into any configuration you want, you can create gold. And in some senses, we can already do that. It just costs a lot more money to do that than the price of gold's currently at. So, I mean, all of these things are possible. And so I guess if there's what are people missing, it might be much easier for them to come up with these excuses for Bitcoin because it's not as established, because it's new, because it's digitally based. But I would argue that from a logical perspective, you can come up with the same type of excuses for pretty much any asset, especially an asset that doesn't produce cash flow like gold. Now, if you look at something like stocks, I again would say, well, you might think, okay, well, there's a cash flow here, but well, what do you really know is going to happen? I mean, if you're owning the stock market at 25 times, current earnings, like you're not getting a check every year for 1/25th of the stocks. Like you're not, like you're kind of hoping and believing this continues, and eventually someone else is going to want to pay for those cash flow streams, even though that 99% of the S&P 500 companies from 100 years ago are like long gone or out of the index, and yet you're owning these things because it's kind of a market, and markets kind of grease the wheels. It's kind of capitalism, right? I mean, this is why socialist economies, they don't have kind of capitalistic markets which share risk. I mean, this is why futures were created, so the farmer didn't have to bear the whole risk of the corn he was growing. So he could go to Chicago and buy a futures or sell a futures contract and know the price he was going to get for corn in the harvest time. And people that wanted to take on that risk could speculate and do that. So there is a societal benefit to this shared risk taking. And it's one of the reasons why the United States economy is so strong is the culture of risk taking, the Silicon Valley kind of VC ecosystem where there's nowhere else in the world where hundreds of billions of dollars just get plowed into crazy ideas, and a few of them turn into Google and Amazon and SpaceX and everything else.
So it's such a great point. What's your most unpopular opinion about Bitcoin, or maybe something that is just, someone would find, odd or controversial?
I guess there's people on every spectrum. So to some people, anything I guess I would say would be kind of unpopular. I do think that there is always like potential for downside. So I do think there are some people who are just 100% almost religiously convinced, and I'm just like, I kind of reserve faith for God, and I think if you are someone who sees Bitcoin in a religious sense, I'm not here to judge anybody and what they see, and they're just so convinced that there's no way that anything could deride this train of like Bitcoin going to $1 million a coin, and this is going to pay for my retirement, and this is just impossible that this does not occur. There are situations one can envision. One could envision a crazy, unexpected quantum breakthrough at a moment that maybe, sends shockwaves through the Bitcoin system in a way. Like even if it doesn't crack it, like because anything encrypted is going to be subject to this. So I'm not like a big quantum doomsdayer, but let's say it rockets, it tanks the faith, and like in the meantime, some other coin, I don't know, something maybe backed by certain people that's got native quantum resistant technology. There are such things. I talk about it in my book, Quantum Oz, where it's essentially has to do with a quantum computer, cracking encryption and different things. And I talk about things like N-True and different quantum resistant, as opposed to like RSA or SHA-256.
Mm-hmm.
I mean, there are certain things out there that I think you can't be blind to them and just say like it's impossible and that's not going to exist. But like I think the quantum situation is still a long ways away, and I think the Bitcoin community probably does eventually need to do something about that, maybe. And there are other things out there too. I mean, there could be a generational shift in 30 or 40 years where maybe younger people create something new and they say, our grandparents had Bitcoin, we need X coin. And this is really what should be the store of value. And it's native quantum resistant and it's created by us and it's got a few features that maybe Bitcoin doesn't have. And so, but again, like, couldn't people say that about gold? Couldn't people say, well, you know what, actually we shouldn't have gold as the monetary base. It should be platinum. It's much more rare. It's got better, conducting properties or whatever have you. So, which I don't think it does, but basically I'm struggling to come up with something that I think is just going to blow people's mind away, that I believe this about Bitcoin and people are going to be like, oh my God, that's heresy. Probably my biggest heresy is my statement earlier that fiat can be a good force for good. That's probably the thing that most people would push back against after derailing against kind of fiat and Monty printing as the root of all evil. I think viewed through the proper lens, it can actually be a force for good. That would be the most controversial point I think I made on this show so far.
Yeah, no, and you're right. And again, we both have kind of touched on it. Like, again, time horizon. That's where I brought up the Grant Williams thing. I mean, everything, depending on what time horizon you are looking at it in, can be bad or good. And I think that that's the thing that trips up so many people, whether it is Bitcoin or it's gold or it's fiat or whatever. It's like we all have different time horizons. We're all speaking past each other like two ships passing in the night because we're talking about different things. So a lot of the fights you see are people just like literally they're not even understanding what they're saying. So like they're just fighting two different things, and it's like that's not that's not what's happening. So
yeah, I mean, because you if you want to have some sort of like an inflationary bias, because you get these really perverse incentives in a deflationary world. So why do you want to buy a house in a deflationary world when you know it's going to be worth less tomorrow and less the day at? Why do you really want to buy anything? And it stifles kind of growth and creativity and the economic system. So the inflationary world, in a way, it's kind of like a cattle prod up society's ass, saying do something new because you need to grow to handle this. And so it's like people a lot of times ask, why does the Fed target 2% inflation? Why do they target inflation at all? Why don't they just target stable prices? They'll say, oh, well, it's just because of New Zealand, pick two or whatever. I mean, but the reason why inflation is targeted is it actually is more of a natural state for society to kind of be incentivized to act in the way that creates a better society. Whereas deflation becomes almost like a self-defeated. I mean, it's deflationary. It's deflating. When you're in a good mood, you're deflated. How do you feel? I feel deflated about something. It's not a positive state to be in. And so let's just say that everything is, all in Bitcoin, and Bitcoin is capped at 21 million, and you buy a house for 1 Bitcoin, but you're confident, well, in, a year, it's only going to be a half a bit. And so, well, wait, I don't want to give up my Bitcoin. If I wait long enough, that 1 Bitcoin is going to buy 3 houses. So I'm just going to hold on to my Bitcoin and some people do that. They're like, I don't want to spend money on anything. All I do is buy Bitcoin, which is great for maybe making money for a certain period of your life. But if that's what you do for your whole life, and that's what society does forever, is do nothing but try to acquire Bitcoin and hold them forever. Like, is that the society we want to live in? No, we want a functioning society where things are happening and people are enjoying their lives. And so that's why I don't get mad if you're an OG and you sold Bitcoin. I don't think it means you're giving up on Bitcoin because you want to cash out. I think that's probably a smart thing to do. If I would have owned Bitcoin at 10 cents a Bitcoin, I would have sold it when it hit $1. I mean, I just,
right.
Yeah. I mean, so power to anybody that held on to it, for as long as some of these people did. So I think when you really think about things, about what do we really want, like what could make kind of short-term strategic sense of like, oh, just hodl and don't spend your Bitcoin and never sell your Bitcoin. And it might make sense in a short-term perspective for an individual, but for a long-term society that does nothing but try to
Mhm.
hodl Bitcoin and grab Bitcoin and doesn't want to spend their Bitcoin and everything, like that's actually not a very pleasant society if you think about it. It could be another good fictional book I could write about. But
Yeah.
basically, I mean, so I think we have to look at it that way and really think about what's going on, and that's why I think fiat serves a purpose. Because now, if we start inflating more, if we start more money printing, all of a sudden that debt that seems insurmountable becomes less and less and less. And then if we get into this abundance world with AI and we have some of these things, maybe we can start doing universal income. I typically haven't been a fan of that. And it seems kind of very like New World Order control-ish. But if we're
Mhm.
truly in a
Yeah.
world of abundance, and it's like, I would rather see a world where people are just like the norm is a 2-day work week, and it's like, oh, you still, instead of a universal paycheck, it's like, actually, again, this is practical versus theoretical. If people just know they're getting a check, idle hands are the devil's workshop. I'm guilty of this all the time.
Mhm.
I mean,
Yep.
sometimes it's better to kind of have a need to do something. So, I think it would be a better world if like you still needed a job, but maybe it wasn't like the cornerstone of your life where you wind up spending more time with your coworkers than your spouse or your kids, which it basically was the case for people before remote work. They spend most of their adult lives with random people at work and see their wife for an hour or two at night and their kids
Right.
on the weekends for a little bit. And like get away from that, and we all start living more creative, free lives. And like I do prefer to be optimistic about this. That doesn't mean there's not going to be societal turmoil. That doesn't mean people aren't
Mhm.
going to kill themselves. People kill
For
themselves,
sure.
each other, all the time. And that's like another point. Like take a step back. Like the world seems crazy, but we have 8 billion people, and there's barely anybody getting killed right now relative to
Mhm.
historical percentages. You can go
Yeah.
back in Neanderthal times and like 25% of the population was like killed in a violent death, right? But like before the age of 30. Like if 25% of people met their death, that would be like what, 2+ billion, humans
Yeah.
would be. Let's just assume that we kept society the way it used to be back in the good old days of hunter gatherers when everybody was peaceful and in harmony with
Mhm.
nature. Oh yeah, 2 billion people are going to get their heads blown off if we live that way, because that's the way those people behave. Right now we have 8 billion people and we have these little hot spots and everybody flips out about it. It's like you cannot control the world without a little bit of a hammer once in a while. And so I don't like it. I don't want anybody to get killed. I wish we lived in a perfectly peaceful world. But the truth is, when you actually take a step back, we live in one of the most, if not the most peaceful times in human history as far as a percentage of violent deaths relative to the population.
Yeah, and it goes back to some of the Satoshi's writings too, right? I mean, this is one of the objections you hear too about Bitcoin, and well, the Bitcoin wouldn't exist if the dollar held its value, or if government would just do blah blah blah. And it's like, well, yeah, that's exactly why Bitcoin exists. Like we wouldn't even have dollars, like gold, like if we weren't melting down coins or clipping them, and government was just acting at the the behest of its citizens, and we wouldn't have any of these things. You're right. So it's like, how do we reorganize that trust? Because that's the trust just keep breaking.
Yeah, the
So
trust is broken. The trust is broken. Yeah.
yeah, the trust is
The
broken.
systems need to be manipulated. They need to be run, but people need to be more transparent. And our leaders are just
Yep.
bullshit machines. Like everything they
Yes.
say is a
Yes.
lie, whether you're a Democrat, a Republican, Biden, or
Yep.
Trump. You can't, trust these guys any farther than you can throw them. I mean, like, oh yeah,
Yep.
Venezuela is all about fentanyl. That's all it has to do
Right.
with bullshit,
Right.
or, I mean, all the, and I'm not saying I've done another show. I did, a show with Marty on TFCC about, I think this Venezuela thing was a good asymmetrical bet. I see the rationale for it from a resource perspective.
Mm-hmm.
I'm not, saying it was a horrible idea. It's still a lot of ifs on how it all
Right.
works out. But my point is that we have these systems where even you listen to Powell and his statement, like, this is about this, the subpoena, takes away the focus from the Fed, which makes its decisions apolitically. I was going to print up the transcript and read his quote, because basically it was saying like this threatens Fed independence, as if the Fed is independent, as if there's no political
Yeah.
considerations that go into these people's minds. I mean, you have Fed
Yeah.
governors like Lisa Cook or whoever that I know would be advocating for cuts in the same economic circumstances if there was a Democrat in office that they wanted to help. And you can't look at the way they did things. You can't say like, oh, in 2024, 50 basis points in September, 25 in October, 25 in December. Okay, Trump's elected, no more cuts, and then tariffs are a tax. Why would people think like, oh, there's a tax going on, therefore that should make you want to loosen policy, not tight? Like all the stuff that goes on when you listen to these people that are in charge of the world, they all talk out of both sides of their mouth. They're all self-serving. Most of them are psychopaths. I mean, you look at the Epstein stuff. I mean, like these people are sick. Like the higher you rise in society, typically the more chance you have of being a psychopath, and that's well proven in the psychiatric literature. So that trust is broken, and that's why the last thing maybe we could get into briefly is just I do see a fracturing of society where it is getting more bifurcated, almost like the 1860s, where there's this wealth inequality component. There is just a cultural component. There's a racial component. There's a ideological component, and the sides are getting more dug in on both sides. And I'm actually somebody who's not really on one side or the other perennially. I just think if there's something that somebody wants to do that makes sense, I would support it. And if I don't think it makes sense, I don't think so. I didn't think it was a good idea to have a wide open border. I didn't like that. I think, I voted for Trump more because I didn't want any more of Biden-Harris policies rather than some love for Trump, and so like, I just want things to work out well and things to go well, but I don't look at any of these people like they're some sort of saviors or perfect human beings. I think they're more likely psychopaths. So that in Congress, I mean, geez, I mean, those people, I mean, Matt Gates or Matt Gates, Bill Gates, doesn't matter. I mean, these people, they're crazy. Like they're out of their minds. And yet they're the most powerful, supposedly influential people. So I do think like you have to just kind of step back sometimes and say, look, we live in a flawed world. Human nature is flawed. Institutions are easily manipulated in negative ways. These are things that are pretty much always existed since human societies began. And unless you really change human nature, are probably always going to exist. But yet somehow we've put men on the moon. We've gone from a few 100,000 in our species to now 8 billion in our species. We've colonized the whole planet. We've figured out how to, send radio waves through space and teleport, I mean, all this stuff. And so even though you can have all this negativity and doom and gloom and be realistic about how the world works, that doesn't mean that you should then deny the true historical path, which has been rising physical abundance, rising population, rising healthcare standards, rising life expectancy, rising technology. These are the longer term trajectories that I think are still in place that give me the optimism that underlies kind of the way I see markets.
What are your thoughts? Like end game, and this could be a year from now, 10 years from now, 100, 1,000 years from now, what have you. Where does Mel think eventually at some point, what is the true market cap end game for Bitcoin and what it needs to account for?
Well, I think ultimately it will be, and I think it is already at $2 trillion. It's already, I mean, until silver had this huge run, it was around 2 trillion. So it's already in this Parthenon of what it is I would call like non-cash flowing neutral asset store of values. And I think you've got gold, you've got Bitcoin as two unique assets, two sides of the same coin in a way. And Satoshi himself referenced and has always made the comparison to gold. There's Bitcoin miners, there's gold miners, right? I mean, like this terminology is not random. So from the inception, from Satoshi himself, there was a corollary between Bitcoin and gold. And I think the end game is that those two assets continue to rise in importance. There will be times when gold has its wind at its back. There'll be times when Bitcoin does. As the generations change, I think Bitcoin grows even further. Do I think you need to get to a state of affairs where you have like this one-to-one backing, where like every asset in the real world is now backed one-to-one by, say, either gold or Bitcoin or a combination thereof? I mean, I don't necessarily think you do. I think the system works without that right now. But I do think that there's a recognition now of the importance of a neutral asset that had been temporarily lost. That there was this brief period, I would call it the 1980s to maybe 2005, kind of a 25-year period where central banks like England, BOV sold like almost all of their gold at like $300 an ounce. And there was this thing like, there's no point in gold. It's a shiny pet rock. It doesn't need. And people realize, as crazy, even Keynes did this. Keynes, realized like there's a role for gold. He did not want the dollar to be the reserve currency at Bretton Woods. He wanted it to be something called the Bancor, coming from the French word for gold, that he wanted to be kind of a neutral, because it just serves this purpose. And it does things in a way for central banks that central banks prefer. The physicality of it, the fact it can be melted down and there's no history, there's no ledger, there's no triple entry accounting of it, there's no public keys or anything like that. So I don't think that the end state is like Bitcoin takes over everything and Bitcoin is the basis for everything. That doesn't mean I'm not uber bullish on where Bitcoin can go, because if it grows in its importance in this pantheon of neutral reserve assets and, stays along with gold in the preeminent position, then I think as more and more money needs to be created to offset these deflationary forces which we face, that it will kind of de facto increase the value of gold and Bitcoin. So a price prediction of where does it go? I mean, it's like for years I've been saying $10,000 gold. I've been saying I don't know if that happens in 2 or 3 years or 5 or 10, but like I don't see any reason why it's not. So $1 million Bitcoin, I would say the same thing. Is it 2 or 3 years? Is it 10? I don't think it's 10, but I don't think it's next year. I don't think it's 2027, right. Maybe not even 2028. Do I think it hits $1 million a coin in the 2030s? Yes. But for me, I prefer to kind of, like I said, look at it pragmatically, add my charts. What's the next level? I want us to get above the 50-day moving average, take out 95,000 on the futures and start trading back towards highs and getting to that 150 price target. I think the speculation on eventually where it's all going to go is interesting. So I have some thoughts on it, but from a practical perspective of what to do, I think, we actually spelled out a few things. We spelled out my age plus 10 rule. We spelled out, why it might be a good idea to diversify or not. And I think one of the things about just overthinking about the philosophical backdrop of everything is it oftentimes complicates more than clarifies right action. So I think kind of overthinking things is something I try to guard against. And so I don't actually spend too much time thinking like what's the ultimate end state of the world's monetary order. I guess ideally it would be like Star Trek The Next Generation, and there's no need for Bitcoin or money or gold, or no one cares, and they can just go to a replicator and create it, or everything is available. So I mean, that would be nice, the Roddenberry future, as they were talking about on that podcast with Elon. It would be nice, and then it becomes neither here nor there. But I don't know. I think it would be a long time before we get there.
Yeah, it's funny. I was just going to bring that up, and him saying that, right? Like, again, we kind of tying a bow on a lot of this stuff, AI and abundance, and like the things that are coming eventually. Maybe there isn't money, and it could be 100 years from now or 1,000. Who knows? But all right, real quick thoughts on tying the bow on the Genius Act, Clarity Act, stuff like that. Are they doing this behind the scenes, or at least part of it? And again, the East is part of this too, obviously, right? But like, I'm trying to think the best way to say it, but you have this world where the dollar, without crushing the dollar, they're doing things to crush the dollar, right?
Yeah,
so like
they want gold to go up. They need an inflationary release valve, and that needs to be something that doesn't function in society as an important aspect of it. It's why when silver's been going up, and Musk said, this isn't good, because silver actually is used for something. Gold, the price can go to whatever. Bitcoin, the price can go to whatever. So I've long said that I think gold and Bitcoin are the two primary releases, because if this money printing is coming that I see coming, and that's going to be necessary to offset deflationary forces, then you have to say, well, where does it go? And traditionally, that's been the S&P 500 and housing. But if housing gets too expensive, we're already seeing the pushback on affordability on housing. The S&P, I mean, okay, you're at 25 times. Can you go to 30 or 35? Sure. But then at a certain point, people are kind of like, okay, we're paying, 100 times earnings. Like it doesn't kind of make sense. So you need somewhere that's basically an infinite reservoir of fiat, and gold and Bitcoin are that. They're infinite reservoirs of fiat that can, just absorb where that money goes and handle it. So what I do think is they want gold prices higher. They want people putting money into gold because that takes away that demand from actual things in the universe that people need, which then drives up the price. So the more you can get people putting money into Bitcoin and gold, the more you're diverting money away from the real economy in a sense. And you're getting that, like I said, inflationary release valve. So I do think that, when we look at gold and we look at what's happening with like China and that, and a lot of people, when they talk about Venezuela or they talk about this Fed, they're like, oh, this is going to be bad. This is going to cause more de-dollarization. I believe that de-dollarization has been in effect prior to 2022, and that the powers that be understood that it's already going pretty much as fast a pace as Brazil and China, et cetera, are comfortable with. And that was why in 2022 they seized Russia's assets. That didn't spur de-dollarization. That was a sign that it was already kind of accepted as, no longer important to the United States strategically for China to buy our treasuries. I don't think it is. China only owns like 800 billion in U.S. treasuries. Okay, you just had Trump say he's going to buy 200 billion in mortgages with Fannie Freddie. The Fed is doing 40 billion a month with QE. You combine those two, in like 4 months, they're going to be spending like as much money as half of China's treasury holdings. So everybody likes to flip out and be like, oh, well, China's going to. And then you look, who else owns our treasuries? It's like Japan. Well, they're kind of dependent upon us. It's Britain. Like there are a few people that own some treasuries that would want to get rid of it, but it's like maybe $1 trillion of like kind of adversarial like treasury holdings out there. I mean, the Federal Reserve just ran $2 trillion off of its balance sheet when it started QT. It was at $9 trillion on its balance sheet. It ran it down to 7. So the Federal Reserve ran off of its balance sheet more than basically if every adversary sold all their treasuries. So I think that the place where U.S. debt's going to get stored is in the Federal Reserve and the U.S. banking system and stable coins. And it's no longer like we need China to buy our treasuries as part of the game plan. So that jig is kind of up. I think ultimately there's not really a need to issue debt. It's, again, that's that gold lens. Like if the government said we're going to issue, and if essentially when the Fed buys debt, it's kind of like the government not issuing debt. It's like, okay, the government issues 100 billion, then the Fed buys 100 billion, then the Fed gets the interest on that 100 billion, and then the Fed remits that interest back to the Treasury. So in a sense, I mean, there's nothing there. It's a completely circular illusion to give people, and there was a central bank chief or a governor from like the 80s who basically said exactly, there's a famous quote of his, or maybe famous for people that are central bank nerds like myself, where he basically says like central bank now in this post-gold world, it basically exists to give this facade of legitimacy to government spending. Like there's not actually a reason why the government needs to issue treasuries. It could just create dollars and not have a deficit and just, and people would flip out about that. But, really, I mean, the Federal Reserve at this point, the only group that it truly serves and helps is the banking cartel. And so the banks don't want the Fed to go away because they get paid interest on reserves. And there's all this, the treasuries serve this collateral purpose and the market plumbing. And so it's just easier to keep the facade going. But like, that's really what's going on,
Not upset the apple cart, right? Like
don't upset the apple cart because that's going to open up a can of worms that's, but it's
It's
not
wild.
like we need to print debt.
Yeah, and it's funny you say it too, because there's I always reference there's a quote from Beardsley Rummel, who was talked about in the 40s, and another Fed head was just like, yeah, taxes for revenue are obsolete, and we do it to coerce people basically to do, and then redistribute wealth and do all this stuff. Like that's why like the Minnesota tax revolt, like all this, it's like hilarious because like they admitted this decades and decades ago. It's right there for everyone to see.
Yeah, it's MMT. It's modern
Yeah.
monetary theory. And the thing about modern monetary theory is if you really look into it and you listen to someone like L. Randall Wray, who's like a big proponent, or Warren Mosler, they tend to be kind of leftist, almost socialist. So they take the theory of it and then they do these kind of policy prescriptions with it that turn a lot of people off. But if you just look at the financial plumbing part of it and not like what they then lead, like people think that MMT says you can print as much money as you want to, and you're never. What they argue basically is that like you will create inflation if you basically government spends so much money that it then starts like creating a demand within the private sector that overwhelms the supply. Like if the government's like, we're going to spend a bunch of money to hire a bunch of engineers to create bridges, yes, it's going to drive up the cost for engineers in the private sector. And so it's more the actual kind of supply demand back and forth of actual goods and services and labor that gets out of whack, that causes the inflation, as well as like that monetary base just exceeding the holding things constant, demand and supply constant, increasing the monetary base is going to create monetary inflation.
Try to wrap it all together. Basically, we mentioned the trying to crush a dollar without crushing a dollar, the revaluation of gold, all these things going on. We mentioned stable coins, the Clarity Act, the Genius Act, all the things. So the Genius Act in Tether, we make me think of Tether, right? So people, who's buying the bond, stuff like that. Is this all part of this? Not illusion necessarily, but is this all part of this game to try to prolong dollar dominance? Like, are we trying to prolong and keep kicking the can and prolong the dollar dominance and spreading that out as far as we can and continue blowing the currency out into there with this kind of MMT style, like, is that where all this is is that the plumbing they're trying to build and keep extending that basically?
Yes. I mean, I think this would get to like the psychological aspects of money, because if the dollar did get to a point where, like I said, it might not be a huge amount of dollars that China owns, but if they just start ditching them, quickly, and then others, even smaller central banks, join suit, and then investors see that behavior, you get like, it's kind of like a run on the bank, if you will.
Yeah. Yeah.
So the U.S. doesn't want to be kind of like It's a Wonderful Life, where all the people come and George Bailey's like, look, we don't have your money, but it's kind of in this person's house or that. So the U.S., like, they don't have the money, and so what they want to do is they want to keep things moving at that pace that does not upset the apple cart. So they know that the dollar as a stable holder of value, like countries were very happy, like Saudi Arabia was very happy to get dollars for oil, buy a treasury bond. In the 80s, the treasury bond yielded 10%. Realized inflation over that period was maybe 5%. And they were like, hey, my purchasing power was not only preserved by owning this treasury, I increased it. They know that game is over. They don't want people to rush for the exits, because that's really the problem. And it's part of the reason why China doesn't just dump their bonds, because they don't want the world economy to collapse. They have a manufacturing based economy similar to the United States.
Yeah.
In 1947, and the United States was in a very difficult position post World War II, because we had all this manufacturing capacity that we had built up during World War II, and then the war was over, and it was like, what do we do with it? And the U.S. realized, well, we need to manufacture for the world, and we did the Marshall Plan, and we did something similar in Japan, and we started exporting all this stuff to Europe, even though they didn't have the money to pay for it. We're like, we just need some way for people to buy our stuff so that people can have jobs, and China needs those people to have jobs, so they don't want the economy to collapse. So a lot of this is really like kind of keeping the masses busy, so, and keeping the masses fed and keeping the financial gears turning. And it's it's nothing more and it's nothing less than that. And so it's not to me any big revelation to be like, oh, it's a house of cards and the dollar is trash. It's like, to me, those are like prima facie self-evident facts,
Mm-hmm. Yeah.
and then once you just accept that, you can move on from that and stop trying to convince everybody that the dollar is no longer going to be the reserve currency. It's not a store of value. You can move on from that to a practical place of, okay, well, how does the world work? What are the
Mm-hmm.
practical considerations? And what is that likely to drive in human behavior? And then how could you express that in like a market, position? And it's like, okay, well, if you think about what's happening in commodities and you look at some of these emerging market economies like a Brazil that's very strong in that they just signed a huge trade agreement between South American countries and the EU. You think about what's been a bad headwind for Brazil in the past has been the real devaluing against the dollar. But if the dollar is going to devalue even more than the real, now that becomes a tailwind. And then voila, you have the EWZ Brazil ETF up 50% last year, while the S&P ETF was up 16% or whatever it was.
Mm-hmm.
So triple X performance of an economy that, who the hell owns EWZ? Like very few people, not to mention it yields 7%, or at least it did the last time I checked it. It might be less now because it's appreciation. But, so these are things that just kind of make sense, and I think that in the long run, these trends play out. In the short term, could there be an assassination attempt on Lulu in
Mm-hmm.
Brazil, and the real tanks and EWZ crashes 10% in a week? Sure, I mean that can always happen. So, but I think these longer term trends are kind of in place, and they're kind of based on this world order, and there are ways to take advantage of.
Appreciate your time. There are just so many things. You just kept making me think of like, okay, but I want to ask this. I want to ask this. So just appreciate your time more than you know. We're all grateful for you. So thank you. Any where can people find you and see more of your work?
melmadison.com or Mel Madison, Mattison 1, the number 1 on X. I have a fictional book called Quaz. It's kind of takes place in the future, and gold and silver prices skyrocket. There's central banks, putting in place digital currencies, and there's quantum computing aspects and AI aspects to it. So people are interested in that. It's a fictional book distributed by Simon & Schuster. It's available wherever books are sold, Amazon, wherever, Audible version available as well.
Amazing. Thank you so much, Mel. Appreciate you. If you like that episode, then you're going to love the playlist we put together for you with our most recent podcast with the top Bitcoiners, sound money, liberty advocates in the world. Go check those out here. We'll see you inside. You're going to love them.